3, 2, 1, go.
Welcome everyone to this webinar on the future of carbon management. Lovely to have you here. Just a reminder, the webinar is being recorded and a recording will be sent to you at some point via email following the webinar. So we've got 4 speakers on the webinar with us today. A brief introduction to carbon removals. As the world fails to curtail rising CO2 emissions to stay on track with a 1.5-degree target, the IPCC estimates we'll need around 6 gigatons of CO2 removal per year by 2050. So I have some prominent carbon removal experts on the webinar here with me today to discuss the opportunities and challenges in this landscape with regards to technologies available and the policies under development. Our 4 speakers are Tamme, Managing Director at Climate Principles, a climate policy advisory. Sebastian Manhart, Senior Policy Advisor at Carbon Future, a carbon removals infrastructure provider. Thomas Rinder, co-founder at Carbony, a carbon removals developer of enhanced rock weathering. And Alexia Kelly, Director at High Tide Foundation, a climate investor involved in carbon removals. So if I turn to you first, Eve, if you could give us a brief introduction to yourself and to your role with carbon removals and the development of carbon removals in the policy landscape.
Thank you, and hi everyone. Thank you to Illuminem and Carbony for the invitation. I'm very delighted to be part of such a brilliant panel today. So a quick intro. My name is Tamme. I'm a climate policy expert. I run my own advisory, Climate Principles. I do have numerous other roles as well. I'm the chair of Zero Emissions Platform, on the board of Puro, also on the board of Carbon Gap, and also in the European Commission's Carbon Removal Expert Group in my personal capacity. I think I managed to cover most of them. If not, check my LinkedIn profile or website for the latest. But I've been working on climate policy for over 20 years now, 15 of which as a policymaker on national, EU and international setting. And these days, I'm mostly focusing on carbon removal, carbon markets, and carbon capture. So obviously today here we're discussing removals, but also tying it into markets. And we know that there is no net zero without CDR. And if you look at it all from the climate policy perspective, then the foundation of climate policy first and foremost is the climate targets. And that's where we are currently now getting to the point where removals will need to start featuring in legally binding climate targets. We're not there everywhere yet, but that's where we're going. So having these separate sub-targets for reductions and removals. And obviously to reach these targets, carbon markets, which means putting a price on carbon, is one of the ways to deliver, one of the many ways, so not the only one. And we have 2 types of markets: emissions trading systems, carbon creating. Currently, removals mostly feature, especially the novel removals, in the voluntary market space. But of course, we are all eyeing when compliance markets will start playing a larger role here. If I checked the latest ICAP status report, so International Carbon Action Partnership, they publish a report every year. We have currently 36 emissions trading systems in force that cover 18% of global emissions. I'm actually curious to see by the next decade if we can also get a number of what percentage of global removals is covered by the emissions trading systems, because that would show where we hopefully have come by that point. So I'll stop here and hand over to the next panelist.
Thanks so much, Eve. Okay, if we move to Sebastian next, would you like to give us some background to yourself, Sebastian, and to Carbon Future, please?
Yeah, of course. Thank you so much for having me today. Very looking forward to this conversation. So I'm an economist by training. I was a tech entrepreneur for around a decade, And then I moved into policy by working for Angela Merkel's chancellery. And I guess from there was no way back. I realized how much I love policy work. And then I found myself in carbon removal when I moved into climate tech. And yeah, nowadays I work really on, and I can say in a second, kind of my key focus areas that I'm most passionate about. But yeah, run policy for Carbon Future. People might be familiar with Carbon Future. We build infrastructure to scale trustworthy carbon removal, primarily through marketplace services and also monitoring, reporting, and verification of MRV products. I, like Evie, I also wear a couple of different hats worth mentioning. I've set up a couple of trade associations, the Enhanced Weathering Alliance, the US Biochar Coalition, and also the DVNE, which is a German trade association, which I'm also the chair of. And more recently, I also set up a company called CDR Jobs, which will help with the transition of thousands, hopefully in the future, millions of people into the CDR space. But what I'm most passionate about is essentially, I guess, three things. One is I believe that the voluntary carbon market has a really important role to play, but I believe that ultimately we will only reach climate relevance through compliance. And so I'm very passionate about that integration, what Evie as well was talking about. How do we get carbon removals integrated into compliance schemes in the best possible way? And that is something that I think is obviously where, as a sector, the trajectory is heading. The second thing is how we create a level playing field. So there are a lot of different CDR technologies. There are some that have existed for longer. They have different maturity scales. Some are also already kind of regulated through secondary legislation, which also already exists for CCS. But ultimately, we need a lot of shots on target. And so I find myself working on those that at the time I feel are getting left behind. So I did a lot of work on biochar. I'm doing a lot of work on enhanced weathering. I'm sure that ocean CDR is going to be next. And just to kind of make sure that those are also included in the policy discussions. And third and finally, while I focus on policy globally, I am very passionate about Europe. I feel I'm very European myself. I feel very passionate about Europe. I think that actually when it comes to compliance, Evie mentioned how much is already covered by compliance markets. The EU ETS alone is 86% of that. So focusing on the ETS in Europe alone could make an absolutely enormous difference. And within Europe, I'm half German. I've worked for Angela Merkel's chancellery. I believe Germany has a really unique position to play, given its history of progressive climate policy, strong industry, big economy, and so on. And so, yeah, I am happy to talk about that if that's interest to anyone, but I'm really keen about on seeing the role that Germany can play in moving Europe forward, but also individually as a member state. But yeah, that's all from me.
Thanks, Sebastian. That's great. Next, we have Thomas Rinder. Nice to see you, Thomas. And you are a developer of enhanced rock weathering. Could you tell us a bit about yourself and also a little bit about ERW, if possible?
Yes, thank you very much. And thank you for having me in this wonderful discussion today. As you said, I'm a developer and co-founder of Carbony, which is developing enhanced rock weathering projects in Bulgaria and Austria. So not to go into too much detail, but to give a little bit of an approach of what enhanced rock weathering is. What we do is we use silicate rocks and we dissolve silicate rocks, because what's happening when you use a silicate rock and dissolve it with water, this reaction consumes acid, and as a result, the pH of your remaining solution goes up. And the beautiful thing about CO2 dissolution in water and pH is the higher your pH, the more CO2 you can dissolve in water. So basically, by dissolving silicate rocks, you make the water absorb more CO2 from the atmosphere. This is a long known process, and it's a well confounded process in the global carbon cycle. All we do is we speed it up, because instead of using whole rocks, we use like fine ground rock, and we spread it on agriculture, forestry plots, where in addition we can have some co-benefits. The beauty about enhanced weathering it's not just really about CO2 drawdown, but rocks like basalt, for example, also have a lot of nutrients like silicon, potassium, and you can look at increased yields. You can look at better pest controls. Something we look into at the moment in research is also that you might increase the phosphorus, the phosphorus bioavailability, for example, in your plot if you add enough basalt. So this could also lead to reduced conventional fertilizer use. And so the list of co-benefits is long. there's quite a lot of us already globally, so Carbony is not alone. What we do, especially what most others don't do, we really focus on forestry plots. For the simple reason that these co-benefits that I talked about, you can unfold them the easiest way if there's not a highly managed agricultural setting, meaning in a forest where you don't do a lot of fertilization, this co-benefit of adding a bit of potassium, adding a bit more silicon, adding a bit more nutrients will really play out easily, whereas in a highly managed agricultural setting where every nutrient is already set to its optimum stage, the additionality effect of this co-benefit is maybe not so easy to unfold. What else? One thing I like about enhanced weathering is always that I believe it's a very democratic way of carbon dioxide removal. If you think about direct air capture or bioenergy with carbon capture and storage, this is all really CapEx intensive, and enhanced weathering isn't. So in addition, you're also within a few hundred kilometers in Europe, you normally always have some sort of suitable feedstock. So enhanced weathering could be really something that could be applied regionally over most places in Europe, and also places that might not be really suitable, for example, for direct air capture with carbon capture and storage. And since we talk about policy today, of course, related to policy, you said we need 6 gigatons by 2050, and I think, like, at least from my point of view, it's quite clear that the voluntary carbon market will not be able to come up with that. So we need more intervention from governments, and we need that quickly. So some way or other, they gotta use this polluter pays principle to get this money into nature restoration, into carbon removal. And therefore, us as an enhanced weathering project developer, it's really important, of course, how this will play out, which CDR technologies will be subsidized, where the money will go. And we basically think with all our co-benefits and also this regional approach, we would have a very good shot at being included into this portfolio of carbon dioxide removal. Because as Sebastian said before, we will need all hands on deck for that. Thank you.
Thanks, Thomas. That's great. And next we have Alexia Kelly, Director at High Tide Foundation, which is a climate investor. So she's going to speak to us a little bit about their take on financing in this space and how High Tide Foundation is involved. Over to you, Alexia.
Thanks, Bryony. Good morning or evening, as the case may be, to everyone. Thanks for joining. Thanks for the invitation to participate today. I'm Alexia Kelly. I'm the Managing Director of the Carbon Policy and Markets Initiative at the High Tide Foundation. The High Tide Foundation is a private family office philanthropy that focuses exclusively on the climate crisis. So we invest broadly across the space, largely through grant making, but occasionally through direct investment in emerging companies to help us scale solutions to the climate crisis. A lot of our work focuses on the carbon market and carbon pricing policy. I've worked for the better part of 20 years in a variety of capacities around carbon markets and carbon policy, including the 6 years as the lead negotiator for the US government to the UNFCCC on Article 6. So have spent a lot of time thinking about carbon regulation and also incentive structures. I'm here sort of representing the American perspective. It's really different than where we are in Europe, and so looking forward to the discussion there. But I think there's no doubt and broad agreement and recognition that we are, in fact, in a 5-alarm climate emergency and need every tool in the toolkit. And so I think the challenge for policymakers is really going to be, how do we incentivize all of the near-term mitigation actions that we know are absolutely imperative, that the IPCC has been very clear need to be delivered between now and 2030, while also building pathways and incentives for the longer-term technologies that we're going to need to be operating at scale, in the latter half of the century. So as we move into the 2040, 2050 time period, we know that you don't just flip a switch and have these technologies be operating at scale and cost effectively. And so thinking about that balance as we're allocating resources and as we're really looking forward. Our work focuses a lot on just the rules around the greenhouse gas accounting broadly. So how do we think about making sure that any technology, regardless of whether it's a reduction, a removal, unavoided emission, we have good systems in place that are transparent, science-based, sound, updated and reviewed regularly, so that as we're continuing to evolve our understanding of the science in particular, we're able to adapt the policies and regulations in place so that as we're relying on these carbon crediting systems, voluntary, whether they be voluntary or regulatory, we know that what's being represented in any instrument that's being traded, in fact, represents the thing it says it's going to do, which is that it removed or it reduced a ton of carbon in the atmosphere. So we support the work of the Integrity Council for Voluntary Carbon Markets and have been working intensively across a range of issues related to both looking at the existing methodologies in the market that have been developed to date, as well as really starting to look at some of the forward issues that we know are going to be particularly important. I've had the opportunity to collaborate with Eve and some others on our work and thinking around permanence. So looking forward to sharing a little bit more about that as well.
Okay, thank you so much, Alexia. And I realized that I didn't introduce myself, so I better just do that. My name is Bryony Collins. I'm a journalist at Carbon Pulse, which is a news provider about carbon markets, climate policy, net zero. We write quite a lot about carbon capture, carbon removals, of course, and voluntary and compliance carbon markets. And we also have a strand about biodiversity. So yeah, check us out. And we have a great daily newsletter you can sign up to for free, which will give you lots of updates about this space in your inbox every morning. Great, so let's go to Eve first and talk a little bit about the challenges with carbon removals and compliance schemes and policy. Do you want to talk a little bit about where first we might start seeing removals integrated into compliance schemes?
Well, yes. It a little bit depends how we look at things, because we have some parts of the world where we had forestry included in ETS at some point, but mostly where we are looking at removals to be included in compliance markets these days is the EU ETS, as Sebastian mentioned. The biggest chunk of compliance markets, if you look at the market size, is the EU ETS itself, and also the UK ETS, and on the international carbon markets context, also the Article 6 of the Paris Agreement, 6.2, 6.4, both relevant in this context. So the thing is, as we all know, that we need removals and we need to scale up removals fast to have them available at the scale needed when we need them. One would think, well, why aren't they already part of compliance carbon markets? Why do they mostly feature in voluntary markets, especially the more novel removals like direct air capture with carbon storage, bioenergy with CCS, biochar, enhanced weathering, and so on? Well, the challenge is that policy making takes time. These are not fast processes, and the removals really came to the picture with net zero targets, when suddenly everyone realized that to balance out those emissions, you need something, and you need more of that than we currently have. As I mentioned, everything that happens in the policy space really trickles down from the targets, and we haven't had really specific removals targets so far that would really guide the inclusion of removals in markets as a consequence. We will probably see that specifically playing out in the EU quite soon, because we are supposed to see a proposal for its legislative proposal for its 2040 targets early next year. Even now that we know that it's needed, it's not a fast process to happen. So with the EU ETS, we know that there's going to be a report from the Commission in 2026, which sounds, well, we're almost there, but not really, because that's just something that will outline whether and how these removals could be included in the ETS. The actual inclusion is unlikely to happen before 2031, which is where the next trading period starts. So that's still quite far away. And those project developers who are looking into funding their projects, it means that they still have to rely on other funding options out there, and still mostly the voluntary markets to help make the business case. Of course, there are some other policy tools emerging also that can help, like public procurement, and direct purchasing and so on. But the UK ETS might actually be a bit faster than the EU ETS in incorporating removals, but we'll need to see how that plays out. On the international setting, I mentioned Article 6. We had sudden and very swift movements that was, I think, unexpected to many market participants just recently, where the supervisory body adopted standards for methodologies and removals for its carbon crediting mechanism. And the stakeholders are mostly optimistic that it will be also rubber stamped during the COP in Baku. And this is actually going to pave the way for operationalizing that mechanism. But even there, if you think about it, it will take time to get the mechanism up and running, and many types of projects take time to really become operational. So I would say in the compliance markets, we really will start seeing removals playing more and more role only in 2030s, which is not ideal, because it would be very helpful to have them there earlier, but that's just the reality. The processes take time. And first you do the process where you establish the new rules, and then it still takes time to start implementing that, and it all adds up, and it takes years and years. Unfortunately, still, I often get the question like, so when are we in ETS? And I don't have fast solutions for that.
Yeah, thank you. That's a great overview. So in Baku, if this rubber stamping happens of the carbon removals like you were describing, what would that mean? Like, does that mean that then project developers can kind of crack on and start developing projects and then sell the credits via Article 6? Like, is it as simple as that, or how would things happen?
Well, this basically helps to set up the general framework for this mechanism, because then the standard is in place. But of course, that's a general document. And there are some, it includes some references to more specific guidance that will still be coming along. Plus, what is still missing are the methodologies, because only once you have approved methodologies, then you can start establishing or developing projects that use those methodologies. So plus there's still the registry part that needs to be figured out. But having these standards, I would say not having the standards was the major kind of challenge so far. It was a major blocker in the process. And the solution that the supervisory body now found in taking their own initiative really removed largely that roadblock. And I think moving forward is going to be less challenging than it was getting through, jumping through this hoop, because it was twice where the COP couldn't deliver on this, and now this is the third time around. By the way, I saw Sebastian raise the hands. I'm curious, what was the question?
I wanted to elaborate on the compliance, because one thing that I think people are not aware of is that if CDR was integrated today, I still don't think it would be a viable option for most operators, right? Because the price in the ETS is very, very low. So this is something that I think is not talked about enough. The ETS, we had an average price of around 70 euros last year over the last 12 months, but that is by far higher than any of the other ETSs. And if we look at other ETSs, it can be much, much, much lower. And so the reality is that right now, I don't think this would be viable, as far as I'm aware, for pretty much any durable carbon removal method, right? And so even if we're thinking about integration, we still have a way to go as a sector to build up the supply that we'll need, but also to drive down the cost. And obviously, it's a bit of a chicken and egg, but the reality is that even in 2031, imagine the EU ETS has integrated carbon removals, but the ETS is trending at 100 euros or 120 euros. It will still be way out of reach. I've recently posted kind of about an interesting price projection by the London Stock Exchange Group, and there seems to be general consensus that in 2035, 2040, prices will reach a level where quite a few CDR technologies will qualify. But right now, as much as we talk about integration, we should talk about how we can bridge that price gap. And that is something that, again, calls for government subsidies, right? Without government subsidies to bridge that gap, we will not be able to actually make this operational. And if we do make it operational, we might get only a single technology that can do it at the cheapest level to actually deliver. So if we want to have a portfolio approach in the ETS, we have to talk about these. In the UK, they call it business models, for example. We have to talk about the price differential as well.
Yeah. Do you want to just give a few examples of how much these technologies are currently costing, like for DAX?
I mean, I know that it ranges from 150 euros per ton to 1,000, 200, 500, and everything in between. I think lastly the average was 350 to 400 euros, I believe. So we've got a wide range, but I think we're really far away from being able to deliver at scale across technologies at 100 euros a ton, right? And so we should be aware of that gap and talk about how we can remove it. Yeah,
I think according to the CDR marketplace, bioenergy with carbon capture and storage is currently one of the cheapest ways. It's got it at $160 per ton on average at the moment. So yeah, there's lots of different technologies and they all cost varying different amounts, and some of them are really, really, really expensive. Thomas, do you want to talk a little bit about enhanced rock weathering and pricing? Can you talk about that, and maybe projects you've got underway and whether you've got any credits sold so far?
Well, I completely agree with what Sebastian said. So in terms of pricing at the moment, it wouldn't help us to be included in the ETS. Like we would not be able to deliver at this price. Prices in enhanced weathering generally, I think they range between 150 to about 500 euros or dollars. So same again, is it which sort of rock, how much is the transport? The technology itself is really cheap with enhanced weathering. I mean, from mining to grinding to application on the field, everything can be included into normal agricultural or mining practice. So there's not really a lot of cost with that. Where the cost comes into with enhanced weathering is really the MRV, which is expensive at the moment. We do have open question. I mean, the science is sound, and we know that what I talked about, pH dependence of carbon dioxide absorption, that's sticking, and nobody's going to challenge that anymore. But then when you go into more detail, of course, there's open questions to where is it feasible, under which conditions, which soil condition, which groundwater situation do I need? What's the pH of the receiving stream? Like, there's a lot of questions. And so at the moment, you basically, if you invest in enhanced weathering, you have to invest a lot into research. So basically, it's like investing in a research project from my point of view, and that's driving the cost. Having said that, we're working together in the Enhanced Weathering Alliance. There's also NGOs who try to get data together. So we quickly, by doing it and by actually applying rock on different agricultural settings, different climates and all of that, we generate a database which hopefully will drive that cost down quite quickly. So if I hear 2031, that doesn't sound too bad for me from that perspective, because I believe by 2031 we'll have much more agreement on what's the actual capacity of enhanced rock weathering. And once you don't have this cost anymore, then enhanced rock weathering can easily go at prices that will be well below 200 euros.
Okay, thank you. Yeah, Alexia, from a financier's perspective, do you think that investors have a role to play in bringing down the cost of these technologies?
Yeah, absolutely. It's going to need, a combination of public and private incentives and resources to help us both get this R&D that Thomas was talking about done and delivered. And it's really important that we be consequent about ensuring that the science is sound and that we really do understand what's happening in these carbon cycling processes and systems so that we can accurately quantify and reflect the impact of these projects. And I think one of the things that we see that we worry about is just the pressure because there is not enough money to invest in the R&D and the basic science for these. There's a lot of pressure to accelerate issuances of carbon removal crediting to projects, perhaps before they're ready for prime time. And we saw this happen with blue carbon, where, in 2010, there was a lot of talk at the UN about the need to include and recognize the important contributions and incentives that blue carbon provide, blue carbon being, marine ecosystems like mangroves and seagrasses. And the community sort of said, you know what, we're not quite ready for that. We need to go and we need to do a bunch of science, but just basic primary science that we really understand what's happening. And then let's talk about it again. And so they did. They went away and they spent about a decade doing the research and building the systems to be able to quantify well what's happening in these ecosystems. And we now have, strong science-based, credible methodologies that we're basing and using to help issue credits against. And so ideally, in all of these markets, we have a strong combination of investment resources and dollars that are going into the carbon removal space, so that where we aren't quite sure yet, there's a huge amount of innovation happening here right now. We have a lot of new technologies coming online that we're able to really do the due diligence and the process and that basic and primary science and research that's necessary in order to make sure that things are ready for kind of prime time in terms of issuance into markets broadly. That's not to say that many technologies aren't there. A lot of these are actually relatively straightforward. And so we just need to move quickly through that evaluation process and cycle so that we can make sure that we are in fact delivering the environmental outcomes that we need to be. And just a note on the kind of differences between Europe and the US. I think in the US, where we are right now, we obviously don't have top-down emission reduction targets that we tried really hard and wish we did. But what we have now is really a combination of incentives, and we've leaned pretty hard on carrots, particularly to help jumpstart some of these nascent industries. So just wanted to highlight a couple of the key policies that the US government has been focusing on to help move this space forward. DOE recently announced, as I'm sure many of you are aware, a $30 million prize for CDR technologies. And so that's been an interesting approach and kind of a novel approach the US government has been taking to try and jumpstart and catalyze CDR technologies and removal acceleration. A number of private companies have actually come alongside them, including Google and Meta, and said, hey, we want to help grow this market as well, and we'll match some of that prize money. So really a nice example of public-private partnerships looking to accelerate investment into this space. The Inflation Reduction Act that passed just a couple of years ago has been a game changer for incentives and particularly tax credits. So we're using tax credits to drive a lot of the investment dollars in the US and from the private sector into these clean technologies broadly. There's one provision of that, 45Q, which specifically provides a performance-based tax credit for carbon management projects that capture carbon dioxide or carbon oxides, including carbon dioxide and its precursor carbon monoxide, from eligible industry and power facilities, as well as directly from the atmosphere. It's $85 a ton, so it's not going to cover the full cost of DAC, but it is getting pretty close to covering the costs associated with more traditional carbon capture, utilization, and storage. And I just wanted to double click on the importance of thinking about these ecosystems sort of growing up together. We have a lot of assets that are already built that are heavily fossil-based. And as part of a comprehensive carbon management strategy, we're going to need to be deploying CCUS on those assets. And that includes both coal plants that have lots of useful life left and aren't going to be shut down anytime soon, and natural gas systems and plants that have been built both in the United States and in China over the course of the last 15 years or so. The oil and gas industry and energy generation less so, but oil and gas in particular, has been doing carbon capture and utilization for a long time. They have not been doing the storage so much. And so a lot of the work that we're doing in the United States right now, and hopefully incentivized by the tax credit structure, is helping them build that long-term durable storage muscle so that we can leverage the huge amount of infrastructure that already exists for moving carbon dioxide around, and permanently storing it in geological places. And I know that this is not always the most popular political position to take in the relationship between kind of carbon management and long-term carbon removal. But if we want to get to scale, and we're serious about getting to scale quickly, I think strong partnerships between and among those incumbent players who really do have all of that infrastructure and know-how and engineering expertise and permitted wells and all the things that are going to be required to actually build a long-term and durable removal system, we're going to need to figure out how to marry up these universes and get them to work more cooperatively and comprehensively together. So there's definitely action happening there. And then the last quick thing I'll note is just we also do have some sticks. So hasn't been talked about it as much, but the EPA power plan rule that the US Supreme Court just upheld will slash emissions really significantly by 2032. And that will require CCUS and other emissions management control technologies to be installed in order to meet the requirements of the EPA standards, which include any coal plants that plan to operate past 2039 in the United States, reducing their emissions by 90% by 2032. So we anticipate, and similarly for natural gas, they need to meet a 90% capture standard starting in 2035, or run below a 40% capacity factor. And so what that means is that carbon removal technologies and management technologies are going to get a big boost in the US, driven by both the tax incentives and credits and also emerging regulations.
Thank you so much, Alexia. That's really interesting. Great. Okay, so in about 5 minutes, I'm going to jump over to questions. So if people have got questions they'd like to ask, please drop them in the chat now. Should we just have one last question to maybe you, Sebastian? If we look at, do you think governments might start picking winners in terms of technologies? Like, I know you've been doing some work on the EU CRCF, and some draft methodologies have been drawn up for that. Does that indicate that those technologies are the leading ones?
And I'll take the liberty of actually making one more reply to something that Thomas was saying. Today, there was really interesting research by the Grantham Institute published on the cost of MRV and how much of that is part of the overall cost of carbon removals. I really recommend it because it's fascinating. Like, for some approaches, it's 5%. For other approaches, it's up to 70%. And it kind of hovers in the 40 to 50%. So this is really, for me, this really exemplifies the potential cost reductions that we could achieve once we've cracked MRV. And yeah, just something maybe on the side. I really recommend checking it out. In terms of picking winners, I have, as I said at the beginning, I have a general stance that we should obviously have as many shots on target as we can. We don't know yet what will reach the 6 or 10 or 15 gigatons, whatever we'll need of carbon removal yet. We have hypotheses, but we really need to keep all options open. And that should really drive how we design policy, right? So policy, in my view, should in general be inclusive, open, and also supportive of different technologies and different levels, depending on where they're at in their development cycle. Having said that, it does make sense to pick winners sometimes, right? Like, while I think an American federal policy or an EU policy framework like the CRCF should be inclusive, if you're Denmark, if you're Sweden, of course, you're going to bet on biomass-based carbon removals because you have plenty of that, you have a lot of experience with that, and you have a competitive advantage in that. And if you're Kenya or Brazil or Iceland, you're going to build out a DAC industry, right? So I think it makes a lot of sense for governments at a national level to be very strategic and opportunistic and focus on their strengths. But I want to stress again, we need to keep the overarching frameworks as inclusive as possible. And the CRCF is a good example where, really due, I think, mainly to resource constraints, the European Commission had to pick a handful of technologies to prioritize. And they prioritized DACs, BECCS and bio-CCS, and biochar carbon removal. It did leave out, for now, for example, enhanced weathering, ocean alkalinity, mineralization. And that is hurting those sectors and means that it will take longer to have, for example, progress in CSCF certified units for mineralization, which is a very mature technology in many ways. And so this is something that I think is tricky and that we need to navigate well. In the US, follow the money, 95% plus of funding is going to direct air capture. I really applaud the small, kind of more diversified pots like the purchase price, but overall they're very small amount. The large percentage is going towards stack, which is good for us. If it doesn't work out in the US, I think we'll learn a lot. If it does work out, we'll thank them. But we have to keep our options more open. But yeah.
Thank you. Eve, would you agree with that, with the keeping the options open idea?
Did you feel in the air that I wanted to say something? There's one element where I would outline where Sebastian said, well, only these three novel carbon removal or permanent carbon removal methods are being considered currently in the CRCF work. And it sounds like it's too little. Back in spring, I, among many other stakeholders, were actually worried that that is too much too fast and potentially may end up, may lead us to maybe methodologies that people didn't spend enough time on, because developing robust methodologies takes time. And the way EU is approaching it, the way it's also trying to incorporate rules from existing regulations into it, it takes more effort. So on the one side, it would be great to have as much as possible, but on the other side, we need to make sure that what is being developed actually is good enough to move forward. And these are not the only methodologies being delivered, because there are also some in carbon farming settings. So there is, I would say the work plan is already quite ambitious.
Yeah.
And maybe we should manage expectations to some extent, also depending on the TRL where certain activities are today. Obviously, they will keep climbing that TRL ladder, but it makes sense to start with those that are on a higher TRL level and then continue with the next.
Yeah, thank you very much. Good point. So I think we'll jump over to questions from the audience now, if that's okay with everybody, unless anybody's got anything burning they want to say. No. Okay, so we've got some great questions in the chat. I'm going to go to the first one, which is around nature and conservation. This person it's from Gustav Stromfeld, and he asks, how do we direct more finance towards capturing and supporting carbon in nature? What is needed to bring back a conservation market? So maybe that kind of speaks to the co-benefits or potentially to the overlap with biodiversity markets. Not sure. Anybody want to talk about that? Maybe
I'm happy to jump in.
Yeah.
And thanks for the great question. It's a really important one. I personally am a big fan of nature's oldest carbon removal systems, which are trees and forests. They've been around a long time and they work really well. Where they run into trouble is really making sure that we have that super long-term, durable storage of the emissions. And that's a really important part of making sure that we, have a robust market that's delivering what the atmosphere needs it to be delivering. And with climate change, we obviously have exacerbated pressures on many of these natural systems that are negatively impacting their ability to store carbon over long periods of time. So a lot of the work that we're doing at the Integrity Council for Voluntary Carbon Markets is really focused on how do we build the back-end support systems that ensure that the entire system is delivering the atmospheric outcomes that we need, even if individual projects in that system might be experiencing reversal events. And so there's a huge amount of innovation right now happening around both what more global approaches to permanence might look like, how we think about more traditional market intermediation when it comes to managing the risk of reversal from nature-based systems, and how we're really building the systems that leverage more traditional, actually, financial insurance markets and other types of risk management systems that exist today that help us do a better job of allocating risk for reversals both from a market participant perspective and also from an atmospheric perspective. So how are we really building out these systems that ensure that even if a reversal happens in a forest, we can go through, do the head counting that we need to do, and ensure that the atmosphere is made whole at the end of the day for that reversal. Those systems exist today, but they need some work. And a lot of the work that we're doing at the ICVCM through the continuous improvement work programs is really digging into how do we develop more unified approaches to that. And this has also been picked up in the UNFCCC Article 6.4 rules and the standard that was just published for carbon removal systems and management. So there's a bunch of new decisions that just came out that are going to help us really determine the methodologies that we're using for doing long-term monitoring of stored carbon, regardless of where the carbon is stored, whether it's in a natural system or in a more technology-based approach, doing a better job of assessing risk in a more standardized fashion so that we can understand and manage the risks across the different types of removal interventions, and really thinking about more comprehensive and coherent systems that operate internationally to ensure that the atmosphere is made whole in the event that a reversal occurs. So lots of complexity here, but also a lot of exciting innovation that we know are going to be really important, because integrating nature into carbon removal, scaled carbon removal markets is really our only path to near-term scale and a really important part of stabilizing life on the planet as we know it.
Thank you very much, Alexia. Okay, should we go back to technology readiness levels, because Eve brought those up and somebody has asked whether it would be worth overlooking the technology readiness level, so the TRL differences, and trying out methods earlier in their development stages. So if biochar is at TRL 8, while enhanced rock weathering is more around 3 to 5, would subsidizing early stage TRL methods be an effective approach? What do you think? Maybe Eve? Well, Sebastian, you talked about subsidizing.
Sebastian has a hand up, so I'll let him.
Thanks. The way that I like to think about it is, let's think about a time spectrum, and we'll need different technologies at different moments in time at different scales, right? Like this is and we need to think in a differentiated way, like what is ready today? And what do we need to achieve our objectives today, tomorrow, in the next 3 years? But also, where do we want to be in 5 and 10 years and so on? And I think optimizing for what is most ready today and only going for that, or going for that too much, is not going to be an optimal outcome over a 5, 10, 15, 20 year horizon, right? And that's why when we talk about policy, I think I mentioned this earlier, but it's really, really important that we differentiate within the different technologies, and we have different types of financing and also policy support for different types of technologies, depending on where they're at in their TRL. Because yeah, as I said earlier, we don't know what will win the race in 10 years from now. If I were a government, obviously at some point in time, I'm just going to look at what's going to pass the quality threshold of permanence, of co-benefits, whatever it is, of safety, and then I'll just scale to oblivion whatever is cheapest. But we're so far away from being able to make that choice that we need to keep all our options open and kind of create some sort of even playing field by subsidizing them at different rates.
Yeah, maybe to add to Sebastian here, it's obvious we need to look at everything, because we will need everything. And even then, the question is, will we have enough, right? But we also have different tools for different methods that are on different TRLs. There's no way that something in a very early TRL is going to be incorporated into compliance markets, but that's fine. No one is expecting it. We have voluntary markets playing this important role of being a piloting and testing ground for new solutions. And that is great. And then there are some that are too early for that. And for that, there are research grants, there are other streams of funding. We just need to make sure that funding is available. Different types of funding streams are available across the spectrum of TRLs to make sure that we have different removal methods, scaling up getting cheaper, climbing up the TRL ladder, and we have this ecosystem that supports that.
Thank you very much, both of you. Maybe a question on the carbon border adjustment mechanism that's being introduced in Europe, and then other places might be too. So how might that interact with the likes of carbon removal market, say if the UK develops a UK CDR market? Anybody want to go from that? That's from Hugh Healy. Anybody want to?
I can share some thoughts. I'm not a CBAM expert, but I think when I'm thinking about the CBAM, first we should be aware that while we talk about the rising prices of the ETS allowances and how that's good for carbon removals, let's remember what impact that will have in a lot of countries outside of Europe, right? Like this could have devastating impacts. I was talking to somebody from the Turkish cement industry the other day. Turkey is the #1 exporter of cement in the world, a lot of that to Europe. And their projections that the cost for imports to Europe could go up by 700% from Turkey because of the CBAM. And that would essentially destroy a whole industry that is currently providing livelihoods for hundreds of thousands of people, right? So I think it's important to also remember that the price on carbon, while necessary for the climate, has some massive implications abroad, especially. And how do we enforce it through the CBAM? So maybe that's just one thing for people to remember. The second thing is, it could potentially provide a market for carbon removals abroad, right? Because a lot of what we discussed today has kind of national boundaries. The CSCF is focused on European removals. And I have a hope that the CBAM will potentially, with an integration of some sort of certified schemes of carbon removals, allow for example, a Turkish cement producer to procure CDR, have it in its supply chain, whatever it is, within Turkey, and be able to thereby lower the cost of importing it to Europe. So it could potentially be a tool that could allow us to actually create demand for carbon removals way outside of Europe or the US, which is currently a bit of a bottleneck, I think, in the current policy that we see in place.
Thank you very much. Yeah, that's really interesting. Should companies, yeah.
Sorry, I was just going to double click on Sebastian's point about the kind of geographical distribution of both the technology and investment and also the impacts, because what we see in the technology CDR space is that it's heavily concentrated, both from an investment perspective and a startup perspective in the global north. So the US, the EU, and the UK are really driving the vast and receiving the vast majority of startup dollars. There are smaller startups in the global south. Their access to capital is a perennial challenge for them. Startups in the global south have a very difficult time accessing venture capital resources and the types of highly risk tolerant capital that tends to be necessary and is really characterizing what's flowing into this space. So it's sort of this funny mix right now of high risk, high return expecting investment capital from venture sources and very patient, very long government dollars, sometimes mostly grants actually, that are going in. And so figuring out how we bridge all of the other capital needs over the course of a project development life cycle is going to be really important. And also really thinking about how do we align incentives and start to flow resources into the global south, which has some really natural competitive advantages in the carbon removal space, particularly with regard to natural carbon removal systems and with regard to places that require a lot of labor, because both labor and land is cheaper in the global south almost across the board. And what that means is that we have more cost-effective opportunities to scale up investment, particularly in natural carbon removal systems. And so as we're thinking about all of this, making sure that we're building incentives for international capital flows and for the equitable participation in these emerging markets by global south startups and technologies is going to be really important as we're putting all of the policy puzzle pieces together in both Europe and the US. And I think we're unfortunately quite far from really having a policy framework that does that as effectively as I think we'd all like to see it be working.
Thank you very much.
Yeah.
Do you try and channel a certain amount of investment dollars into certain parts of the world? Is that part of your investment remit, or? Is it more technology focused?
So we're mostly a philanthropy. So we do
Okay.
largely grant making to nonprofits that operate in this space.
But is that done on a regional basis, or is it really technology focused?
It's globally focused. So our family office works extensively in Latin America on emission reduction technologies, but mostly through nonprofit intermediaries and partners.
Great, thank you. Okay, so one final question. I'm going to turn to the time issue from Andrei Sobolaski. What if we run out of time? We've always planned rational responses to climate, but we've always fallen short in our delivery. How will we deal with a sudden and urgent need for CDR after a climate calamity triggers a dramatic global political response that imposes strict emissions limits? Does anybody consider this much? Does anybody want an answer to that very tricky question?
I mean, that's why we're all trying to avoid that, right? I hear you, Andre, but I mean, the reason that we're all working on this policy now and not in 2035 is because, I guess, at least I have to believe that hopefully we can ramp up carbon removals, obviously emission reductions, but carbon removals as well, before it reaches this point. If it reaches that point, we're pretty screwed.
Thank you. As experts in this space, what are the next things that are really on the horizon for you that you think are going to happen in carbon removals, or that you've got your eye on, that you really think are going to accelerate the space forward? Is there anything anybody would like to flag that you think is really, is it the CRCF? Is it Article 6? Is there anything you're really hoping on?
I think, I guess I'll just go very quickly. I think landing the rule set for Article 6 is going to be very important, and that will be more important the closer we get to 2030. I think it's really clear that most countries are not on track to deliver on their nationally determined contributions, which are the commitments they made under Paris. And I suspect that in 2027, 2028, we're going to see interest in carbon markets and emissions trading peak pretty significantly, because countries are realizing that they're not going to meet the targets that they set for themselves. The other thing I would say is just landing net zero policy and finding a sort of set of sensible requirements for ramping investment in carbon removal, as well as prioritizing all of the other carbon reduction technologies and activities that we need to undertake in the next 10 years will be very, very important as well. And so work to do there to make sure that we have those voluntary incentives in place and that the voluntary corporate buyers continue to buy. So creating that on-ramp for them is going to be really important.
Thank you very much. Anybody else got anything want to say maybe about voluntary carbon or working with private buyers? No?
I mean, I wouldn't add anything. I think what Alexia just said on like where the bottom line is, where the important developments are. Yeah, fully agree. Yeah, absolutely. Okay, well, thank you very much, everybody, for joining today. It's been great to have a discussion with you all on carbon removals. And yeah, like I said before, the webinar is being recorded and will be sent to you by email. And yeah, thank you very much for joining us. Bye, everyone.
Thank you. Thanks for listening in, everyone.
Thank you very much. Goodbye, everyone.
Bye.